Stephen, it's great to have you back. You're not more worried about rates here and the underperformance we've already seen?
Well, I certainly think that volatility is going to be the watchword for 2022. And certainly what we've done in our note is we've also recognized that, and we've actually taken down some of our target multiples. We think it's going to be a hard-fought year. We think it's going to be earnings-driven, any upside in the group. But on the other hand, we also see so much upside in the earnings relative to what the street is looking for now, that we think at the end of the day, these stocks have significant upside. I mean, many of the stocks, even with our reduced multiple targets, show 50% upside from here. And so that's just too much to pass up. We think it's going to be a tougher year, but we think it's going to be one that's ultimately going to have the builder stocks higher. Your
top picks are Pulte, Lennar, and D.R. Horton, all of which had a really nice 2021. But you say basically the lack of supply is the key reason why the market will continue to outperform. At what point do the stocks acknowledge that?
Well, it's been happening gradually. You know, it's certainly something that I think continues to surprise people. You know, like for the 18 months now, we've really heard people, you know, raise one concern after the other as to why housing's not going to do well. At this point, I believe most people believe that it's a very bad time to buy a house. I think that is by far and away consensus. And what I would tell you is that when no one thinks it's a good time to buy a house, you don't have a housing bubble, right? And so what's going to happen is that you're going to have this group climb the wall of worry. Home prices are not going to roll over. They're going to actually continue to move up because of this crushing lack of supply. And I would also tell you that, you know, you mentioned rates, and that's certainly very important. And rising rates is obviously not good for housing. But I would say from the fundamental side, remember that home buying right now is need-based. The demand for housing is motivated by need, not greed. We have underbuilt this country for 15 years. Nobody wants to buy a house if they don't have to. Speculation in the market is still very contained. So if market demand is driven by need and not greed, it's going to be much more resilient to rising rates than it might otherwise be.
So, Stephen, what is the bigger thorn in the side of home builders? Is it rising rates or is it supply chain problems? What's vexing them more?
Certainly, I think that we went through a period, Tyler, over the last 3 months where supply chain dysfunction was an issue that investors had to grapple with. And I think it made earnings move sideways for a quarter after after quarter of moving higher. They kind of moved the margins moved sideways. Mm-hmm. We think that's going to resume here because the builders have done a very good job of adjusting to this new reality. Look, home building is a complicated business in the sense that there's a lot of parts coming from all over the place. They got to come in a certain order and all that. And so it certainly was an industry that was impacted, saw lengthening construction time. We think that those construction cycle times will certainly not lengthen materially in 2022. And you know what? If they actually start contracting, then you're going to get builders that are going to be able to surprise people with how many sales they can make, because right now they're not selling more because they can't build more. If they can build more, they're going to sell a lot more.